Are you wondering what all the fuss is about with Bitcoin and cryptocurrency? Well, want to know more. In this article, we'll dive into the world of short selling and Page, how it relates to the cryptocurrency market. First things first, what is short selling? It's when investors borrow shares of an asset, sell them at the current price, and then buy them back at a lower price to return to the borrower. Sounds simple enough, right? But what happens when the price doesn't go down and the investors are left with a big old bag as it seems losses? That's where the fun begins. According to a recent report from S2 Partners LLC, there's been a whopping $11 billion in short interest in the cryptocurrency-linked stock sector this year. That's a lot of fan. The bet dilute and friends inspective because that matters. It's bets of their era. For two men, it's caused, but the best thing to do was better is cryptos. But here's the thing, short sellers are getting burned. Bitcoin's year-to-date gain of over 150% has resulted in paper losses, nearing $6 billion for short sellers. Ouch, you think they'd learn their lesson. But nope, they're doubling down on their positions against the sector. Ihor Dusan-Yuski, Managing Director of Predictive Analytics at S3, says that short selling is a strategy some investors use to anticipate a pullback in Bitcoin's rally or hedge against direct Bitcoin investments. Makes sense, right? But what happens when the market doesn't go down? Well, that's where the risks come in. Several stocks in the sector, including MicroStrategy and Coinbase, are susceptible to short squeezes. This means that if the market doesn't align with their bearish forecasts, short sellers might be forced to purchase stocks to exit their losing positions, driving prices up even more. Talk about a vicious cycle, right? So, and in fact, MicroStrategy stock has surged by roughly 167% this year, while Coinbase and CleanSpark have experienced gains of 58.6% and 85.16% respectively. That's a lot of squeezing. It's not just stocks. The broader cryptocurrency sector has seen substantial liquidations. Data from Co-English shows that over $190 million worth of positions have been liquidated in the last 24 hours alone. What can we take away from all this? Short selling can be risky business, especially when the market doesn't align with bearish forecasts. And Bitcoin, well, it really just keeps on trucking, breaking records and making gains. Maybe those short sellers should rethink their strategy and hop on the Bitcoin bandwagon instead. With that said, thanks for watching, and until next time,